This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, December 12, 2014. So the euro remains locked within an intense downtrend while below the 50-day moving average, with the market expected to trade back down towards the recent 2014 low at 122.48 and then below there exposing the 2012 base at 120.40. Ultimately, only a break and close back above the 50-day moving average would force a shift in the structure and take the pressure off the downside. Sterling dollar. Cable continues to consolidate just off recent 2014 lows, with the pressure focused on the downside for a break back below 155.41 and towards the next downside extension objective in the 53.50 area. Ultimately, only a close back above 58.26 would take the immediate pressure off the downside. Dollar yen. Dollar yen has recently broken down below the 10-day moving average, which could open the door for deeper corrective declines to allow for this unwinding of overbought studies into the 115.50 area, which represents the 38.2 fib retracements off of the October 15th low to the recent December 8th high. Only back above the 10-day moving average would suggest that the market is putting in a shallower base and is poised for a more immediate resumption of the uptrend back towards the recent highs at 121.85. Euro Swiss. Euro Swiss is back to trading lower towards the major barrier at 120. The 2014 low comes in by current levels just under 2010, and a break and close below 2010 would expose the door, would open the door for an immediate retest of the 120 barrier. Still, inability to take out 120 could open the door for another correction higher, but a break back above 120.45, the previous base from September 2014, will ultimately be required to take the immediate pressure off the downside. Aussie dollar. Aussie dollar remains locked within a very well-defined downtrend, and any rally should continue to be very well capped. Previous support now turn resistance in the 85.40 area would be a formidable area if the market does find a rally, but eventually the market is seen lower to another fresh 2014 low below 82 and towards the major psychological barrier at 80 further down. Dollar CAD. Dollar CAD has recently broken out above the previous 2014 high at 1467 from November, with the break now exposing a move towards a measured move objective at 1750 further up. Only back below 1313, that's the low that we saw on the 1st of December, would take the immediate pressure off the top side. Kiwi dollar. Though Kiwi has recently bounced over the last several sessions, the market did put in a fresh 2014 low on the 9th of December, trading down to 76.10. A break back below 76.10 should be expected and will open the door for a measured move objective down towards the 72.85 area. Ultimately, only back above 80.35 would compromise the current bearish outlook. SPX 500. The S&P 500 triggered a double top formation this week, with the market taking out 2049, the neckline at 2049, to expose deeper setbacks into the 2020 area. From here, there is still room for deeper corrections, with the weekly chart showing a reversal and the potential for the market to accelerate back down towards 2000. From here, ultimately, only a close back above 2049, the previous neckline, would put the more immediate pressure back on the upside and suggest the uptrend is intact for a push to fresh 2014 and record highs towards 121. Gold. Gold has been locked within key range between 1131 and 1256. The market ultimately remains locked within a more medium and longer term downtrend below 1256, with a break back above this 1256 high that we had seen back on the October 21st required to take the pressure off the downside and force a shift in the structure. Inability to take out 1256 will keep the market pressure to the downside, with the potential for a lower top and resumption of declines back towards 1131. That's all for today. Have a good one.